Okay, so we have discussed about the taxes, the different types of taxes, and we have also discussed about the terms related to taxes, and then we have discussed about the various direct taxes. So in this session, we are going to discuss about indirect taxes. Okay, so here we will see indirect taxes, and all indirect taxes are actually merged into GST, and GST is actually based on the ideal concept, the ideal tax. What is that? It is VAT. Okay, so GST is actually based on the concept of VAT, value added tax. So what I'll do is I'll explain you what is value added tax. I'll show you example how this value addition is coming in each stage and how taxes are imposed on each stage of production. Okay, so GST is based on value added tax concept. So we will try to understand what is this value addition. So just give a heading now, value added tax. Value added tax. It is directly from NCERT only. Okay, so it is an indirect tax. Just write one line. It is an indirect tax which is imposed on value addition. Indirect tax which is imposed on value addition in goods and services, in goods and services in each stage of economic activity. In each stage of economic activity. So here it will go like this. The value addition means the value of output in each stage, value of output minus value of input. So you will get how much value added, right? So to the input, what value added? So if you can subtract from value of output the value of input, you will get the value addition, and it can be done at production stage as well as sales stage. Okay, so for example, when you discuss about sales stage, if the shopkeeper bought at 8 rupee and he sell it at let's say 10 rupee, okay, and then this is actually the change, right? So he is getting 2 rupee, so he need to pay the tax for 2 rupee. That is the value addition. So if the shopkeeper is buying at 8 and selling at 10, so what is that extra is there? That is what he need to pay. Just write one line there. It replaces all domestic indirect taxes. It replaces all domestic indirect taxes like excise. Excise is at the production stage. Okay, comma, sales, comma, service tax, etc. So it replaces all domestic indirect taxes like excise, sales. Sales is at the sales stage and by the states, excise by the center, production level, service tax, you know that. Okay, comma, because it is imposed on each stage of production, because it is imposed on each stage of production and distribution of goods and services. Each stage of production and distribution of goods and services. Okay, you can write one more point there. It is also called multi-point sales tax. Multi-point sales tax. So it is done upon the value addition in each stage. That's why multi-point sales tax. And one more you can write, it is a destination-based tax system. It is a destination-based tax system. So earlier many taxes, right? Excise tax, okay, service tax, entertainment tax, all these was there. So here now only we are discussing about the concept of VAT. Okay, now what will happen with the tax? Will the tax collection will reduce? Actually, different taxes were understood in this way. It is not that the taxes are removed. Taxes are not removed. Taxes are still there. Actually, only name is changed. So the tax won't be reduced. Okay. So if you see that here only everything is merged into, or all the domestic indirect taxes are replaced with VAT. So actually taxes won't reduce. The taxes remain the same, but the name has been changed. So everywhere tax will be there. I'll show you in a table here, and this is directly from NCERT only. So in case if you have any doubt, you can just refer that. Stages, you can take down along with me different stages. Producer, product, input, output, value addition. Value addition, how will you get? Output minus input, right? And then we will calculate VAT, and we will also see what is excise or sales tax. Excise or sales tax. So excise or sales tax. So here excise is upon the output, VAT is upon the value addition. Okay, so let's say both at 10%. Let's take both at 10% and see, we will see what is the difference. So we will see different stages, like 1, 2, 3, 4 different stages. And in the first stage, let's take farmer. Actually, farmer income or the produce will not be taxed, but here I am taxing it just for the purpose of understanding only. Okay, so farmer income, otherwise the produce will not be taxed. So farmer, let's take wheat. Okay, and input, he might have input is, let's say, 10 rupee, just some random values. Output 30. Okay, so input 10, output 30. So what is the value addition here? Output minus input, that is a value addition. So 20 rupee is the value addition by the farmer in this context. So value addition is 20. Okay, now here what will be the VAT? VAT will be upon value addition, that means 2. What will be the excise? That will be upon the output, that become 3. Now why it is more? Because in case of output, if you see, input will also be counted, no? So input is not exempted. So that is why this 1 rupee more, or it is coming as 3 rupee. Let's see 2-3 more example within this itself, so it will be very clear what exactly is value addition. Then if you go for miller, so the farmer is selling it to the miller, and miller, what he will do, he will grind this into the flour, right? So it will be flour. So the product by the miller is the flour. So what is the input there? The wheat is the input. And what is the cost of the wheat? This output cost, this 30 will be the cost of the input for the miller. I hope you understand. So this will be the cost, and suppose 40 is the price of the flour or output. Then what is the value addition here? This difference is the value addition. What is that difference? That is 10 rupee. Okay, and if you tax, if VAT is there, then what is the VAT? 10% upon 10, that is 1 rupee. But if you calculate excise, what will happen? It is upon output, so it will become 4. So you see here, since you have paid before the tax, here in the stage only 1 rupee is charged. But it doesn't matter whether you paid before or not, still you need to pay upon the output here. I hope you can understand the problem now. So instead of 1 rupee, you need to pay 4 rupee, because you need to pay again for the input which already was taxed before. This 30 was taxed before, still along with this 40 also this is taxed. Okay, so that is actually the problem here. And if you see one more, I'll give you an example. This flour is bought by a baker. Exactly the same example, if you want, you can see in NCERT also, but you may be feeling some difficulty in interpretation. Now I'm making it very clear. So baker, what is his output? Cake. Okay, and what was his input? This flour was his input, so it will be 40. Okay, so 40 is the input, and let's suppose the output cost is 90. So what is the value addition here? This difference is the value addition. 90 minus 40. What is that? 50 is the value addition. So what is VAT? VAT is upon this 50 value addition only, and that will be 5 rupee. But what about this case? Entire output will be taxed, so it will be 9 rupee. So you see here what is the difference. So in each stage, now see, in case of farmer, when he is selling it to the miller, he will grind into flour. So actually from this stage only the tax will come, because the farmer produce will not be taxed, no. But here, just for making you understand only, I am writing here, otherwise this will not be there. Okay, I hope that point is clear. Then fourth one, this cake finally come to the shopkeeper. So shopkeeper will sell it, right? So it's only for the sale. And what is the input cost here? 90. And suppose he's selling at 100. What is the value addition here? Here the service is there, so value addition is 10 rupee. So what is the VAT here? VAT will be upon this value addition only. So VAT is charged upon the value addition, and that will be 1 rupee. But what about the excise, or if you see upon the output, it will be 10 rupee. So you see here so much of cascading you can see. So if you can calculate ultimately how much tax you paid, okay. So input, if you add up all these, it will come around 170, and output, if you add everything, it will come around 260, right? And value addition, this difference, that is 90. So if you calculate upon value addition, the tax is 9 rupee, 10%. But if this is the case, it will be 26 rupee. Okay. So what is this? This is so high, right? Why it is so high? Because of a lot of cascading effect is there. Once you charge tax here for the input, this output, then that become the input here. Still you are charging tax on this entire output. And when that become input here, you are charging it upon the entire output. So it was already taxed twice. Now this is the third time. So that is the reason why, if it is taxed once, okay, and then the only value addition, what is not taxed, that will be coming under VAT. What is the value added? What is the extra addition is there? That will be taxed here. So I hope you understood the concept of value addition. So GST is actually based on this concept of value addition. So it will be taxed upon the value added. Now just write advantage of VAT.
Yeah.
Tell me. Now the advantages. Advantages of VAT. Actually, this is the same advantage you will see. You have to write in case of GST also, because GST is based on the concept of VAT. Okay. So the advantages, it reduces tax evasion. First one you can write, it reduces tax evasion. Okay, so it reduces tax evasion. How it reduces tax evasion? It will actually, you can write one line, it will enable the tax officials to cross check. It enable the tax officials to cross check accounts of various firms. Accounts of various firms. Okay, so when the accounts can be cross-checked, what will actually happen? Nobody can actually claim higher inputs, right? So if somebody is, otherwise what you can do, you can claim higher inputs and you can get rid of tax. Okay, so some tax deduction will be there. But here, if you claim the higher inputs, what will happen? You can actually cross-check with the previous case from where you bought and how much he paid. So that you can actually cross-check. Complete data will be there. So that's why I've told you it will enable the tax officials to cross-check everything properly. And one more reason you can write, it reduce effective burden of tax on firms. It reduce effective burden of tax on firms, which improves or encourages, voluntary tax compliance. Voluntary tax compliance. Why it will encourage voluntary tax compliance? You see here itself we can understand. If it is based on this concept, you need to pay 26. So you don't think that you may not pay tax, but here, or if you see here in the last case, this you can see 10 rupee you need to pay. You won't pay 1 rupee. You need to pay. You will pay voluntarily. You will pay. Okay, so that is what you mean by it will increase the voluntary tax compliance. Next point you can write, it encourages firms to purchase. It encourages firms to purchase inputs from those firms, which have paid taxes to, why why it will encourage the firms to purchase from those firms which have paid the taxes? Because it will reduce their own tax liability. Because if it is the input is paid already, then you just need to pay value addition only. Otherwise, once you complete your product, you need to pay complete output, right? Because input is not already taxed. So it will actually encourage the firms to purchase inputs from those firms which already paid tax. So that is another case.
Sir, so it can be passed on from one stage to another.
Yes. Actually,
Okay.
if it is not paid, automatically it will be taxed in the next stage. Because you need to claim that input credit. It is based on, you need, in the context of, in India, practically there are a lot of difficulty in implementing exact VAT that we are discussing. Okay, so instead there is a different mode, that is a mode VAT, which was actually followed from 1986. I'll discuss that after some time. I'll discuss that. So actually, in case if you cannot claim the input credit, you need to pay the complete tax. So if you need to claim the input credit, how can you claim? The input has to be already paid the tax, no?
Yes, sir. Yes, okay.
Yeah. So that the tax liability can, so if you purchase the inputs from those firms which you already paid tax upon those inputs, then your own tax liability can be decreased. Okay, so that means if tax is evaded at any stage, it will be captured in the next stage anyway. That's what. So that's about tax evasion can be solved. Second advantage, it eliminate cascading burden. Eliminate cascading burden of multiple taxation. Eliminate cascading burden of multiple taxation. That is, each commodity will be taxed at once. Each commodity will be taxed at once, only at once. And then what is the value addition? That will be taxed further. Okay. Next one is again very important in the context of productivity and production. It will promote specialization. It will promote specialization. Okay, so why it will promote specialization is because the tax liability under VAT is not affected by increase in number of stages. It doesn't matter how many stages are there. You need to pay what is the value addition in that particular stage. So specialization will increase. And see, when the specialization increases, the productivity will definitely increase and the profitability also will increase. So number of stages is not important here, not a problem here. If you see here, if number of stages are increasing here, there will be a problem. Cascading will come in each stage. But here, number of stages increasing is not affecting. So number of stages is increasing means that shows the division of labor or the specialization. And that will increase the productivity and profitability. That improves efficiency. Okay, that improves efficiency. One more point you can write, it unifies and simplifies the indirect taxation system across the states. It unifies and simplifies the indirect taxation system across the states. So there will be only one tax, that is VAT. Okay. Under that you can write, it will improve ease of doing business. It will improve ease of doing business, which reduces compliance cost and promote investment. It will improve ease of doing business, which reduces compliance cost and promote investment. So all these are the advantages of GST also. So I won't be discussing separately the advantages of GST. What exactly GST we will discuss in the next session. Okay, but this concept of VAT is actually followed. So advantages remain exactly the same. All these are the advantages of GST because GST is based on the principle of ideal concept, the ideal tax. There is the ideal tax, VAT. But there are some practical hindrances to implement this ideal tax because it is very difficult to calculate exact value addition in each stage. Instead, we will follow another method. We will see that. So 5, next advantage you can write. It creates a national market. It creates a national market or common market within the country. National market or common market within the country by removing restrictions on movement of goods, restrictions on movement of goods across the states, restrictions on movement of goods across the states. Next point, it enables allocation of resources. It enables allocation of resources on the basis of comparative advantage. On the basis of comparative advantage of various states or regions. Comparative advantage of various states or region. That means each state will produce the commodities which it can produce most efficiently. The commodities which it can produce most efficiently. Continuation you can write, it will increase productivity and production at the national level. I'll tell you what you mean by this comparative advantage. I'll give you an example. So just write one line there. It will increase productivity and production at the national level. Okay, now you take the context of Tamil Nadu and Kerala. Okay, for example, if you see the cost of production of, let's say, this pen is 9 rupee in Tamil Nadu and in Kerala it is 10 rupee. Now in Tamil Nadu the tax is, let's say, 4 and in Kerala it is 1 rupee. Okay, so what will be the price? Price here will be 13 in Tamil Nadu and in Kerala 11. So you are from, let's say, Andhra Pradesh. Okay, you are from Andhra Pradesh, and from where you will buy this product? You will buy from Kerala. Why? Because the price is less in Kerala. Actually, who is the most efficient producer here? Efficient producer means who can produce at cheaper price, lesser price. That is the efficient producer. So Tamil Nadu is actually the efficient producer here than Kerala because Tamil Nadu per unit cost is 1 rupee less than Kerala. So if you talk in terms of efficiency and who's the efficient producer, it is Tamil Nadu. But why the price in Tamil Nadu is high? Because of tax. Now, if there is a uniform tax which is going to come, let's say 1 rupee, 2 rupees is the uniform tax, then it will be 11 here and it will be 12 here. So now, as a person from Andhra Pradesh, from where you will purchase? You will purchase from Tamil Nadu. So that is what I am saying. It will give the comparative advantage because then uniform tax is there. Whoever is the best producer, he will get that advantage. So the fittest will survive concept again. Okay, now the limitations. Limitation means what? It will be very difficult for developing countries to implement because proper records, infrastructure, all these are required to calculate these value addition properly. So that one point you can write, and that's exactly the limitation in case of GST also. Just write one line. It cannot be adopted in developing countries. It cannot be adopted in developing countries. There are problems. It cannot be adopted in developing countries because of lack of proper records, lack of proper records, infrastructure, etc. Okay. For example, when we talked about the case of the miller, So while he is making the cake, right, or baker, if you see making the cake, the flour is not only the input which is used for cake, right? So there are many other inputs which are used for making the cake. So it will be very difficult to, you know, calculate and very difficult to accommodate all those properly, because everything is mostly in the unorganized sector, and you need very specific software to accommodate all these things. So, and since most of these activities are in the unorganized sector, it will be very difficult. Okay, now when GST comes, what will happen? Initially the price will increase, but later it will decrease. That is the idea, and that's what we have seen actually. So let's suppose the pen is there. Okay, pen cost, let's say 10 rupee. Now 10% is the tax. So what is the cost now? 11. Now when GST comes, the tax, let's say, is 15 rupee. Okay, so what the shopkeeper will do is, earlier 10 rupee, now 15, 10 percentage, now 15 percentage. So he will charge upon the 10 rupee, 15 percentage will charge. So it will become 11.5. Okay, but in both case, what is taxed? In both case, the output is taxed. So what is the flaw here? The problem here is, in case of GST, the pen should not be taxed. What should be taxed? Only the value addition should be taxed, and that will take some time to come at that level. And that's why this body, anti-profiteering commission, was established to actually pass the benefit of GST to the consumer. Okay, otherwise the shopkeeper will tell only like this: it is 10 rupee and taxes 15%, so you have to pay 11.5%. But understand, it should be on the value addition. Okay, because the input tax credit, he will also get the input tax credit, previous person also will get the input tax credit, so everybody will get that. So you don't want to pay upon the complete output, you only need to pay upon the value addition. So initially this may be the case, may increase the price, but it will come down automatically. That is the ideal tax. Now what we followed, okay, Modvat. Just give a heading, Modvat. Modvat means, as its name tell you, it is modified VAT. As I've told you, there are some limitations in implementing the ideal tax. This is what we have followed, and it was adopted in India in 1986 on the recommendation of L.K. Jha Committee. It was adopted in India on the recommendation of L.K. Jha Committee. It was adopted by the central government on production stage. On production stage. So it was adopted by central government. So production stage. Production tax belongs to whom? Central government. So that's why central government can control only production stage, no? Why not at the sales stage? Because as per constitution that we have discussed in the fiscal federalism chapter. So as per constitution, the sales tax belongs to whom? The sales tax will go to states. So if you need to implement this at the sales level, sales stage, then you need the permission of the state, right? You need if something is affecting the state, you need the permission of the state, and the state also need to be ratifying this case. So just write one line under Modvat. Under Modvat, manufacturers have to pay taxes on the basis of their value of output. Manufacturers have to pay taxes on the basis of their value of output, but the taxes paid on inputs. So you will pay for output. Okay, so you will pay here for the output, not for the value addition. But what will be done? The taxes paid on input can be offset or reimbursed. Mostly it will be reimbursed only, or at the time of payment it will be offset. Okay, so we have discussed about the actual problem with VAT. So it will be difficult in developing countries. So what we will do, we will tax on output and then input will be reimbursed. I'll show you again in a table. For example, VAT we have discussed from the previous table we can take. Okay, or if spaces there, no spaces there. So I'm going with the new one. Continuation from what we have, where we have stopped. Okay. And what was the excise there? We will write, and then we will see Modvat. Okay, so 2, 3, 1, 4, 5, 9, 1, 10. So 2, 3, 1, 4, 5, 9, 1, 10. This is what we have written before. Now, when it comes to Modvat, actually, you will be taxed, okay, here, and based on this only tax will be charged, because output tax, okay, but previous will be offset, reimbursed. So here there is nothing previous, no, this is the first stage. So 3 itself, or 3 minus 0, for you to understand, 3 minus 0, 3, because there is nothing to reimburse here. What about Modvat in the second stage? 4. This is on the output, so you will charge 4. Okay, but what you will do? You will reduce this 3. Okay, so 4 minus 3 equal to 1. What about next stage? 9 minus 4. So what will be the tax here? 5. Okay, and then what will be the tax here? 10 minus 9. Okay, so that will be 1. I hope this is clear. So this is 3. So here also 3. And 3 plus 1, that is what? 4. 3 plus 1 plus 5, that is what? 9. 3 plus 1, 4, 9, 1, that is what? This 10. So this is how. Now if you calculate here, but still there is a small difference. It's not exactly like VAT. VAT, if you calculate how much total is coming, 3 plus 5, 8, 1, 9. Right? So this is pure value addition. So here if you offset the inputs, or reimburse the inputs, here how much is coming? It is coming around 10 rupees. This is what actually coming here. Okay. So here Modvat is based on what concept? You tax on output, but reimburse the input. That means the previous tax. So previous tax should be reimbursed. So this is on output. All time on output. Here output, here output, here output, here output. So if you add this will come around 26. Right? So this 26 is all the time on output, so cascading is there. But here it is reduced to 10. But original VAT, if you see, 9. Which one is easy to implement, VAT or Modvat? Modvat is easy to implement, especially in developing countries. But it is narrower concept. It is a narrow concept. It is narrower. When we implemented only at production stage, okay, and not at distribution stage. So in that way, you can say it is narrow. And in 2000, it was renamed as Senvat. Okay, that is central VAT. Senvat, that is central VAT. And there's a minor difference. Like earlier, there were different tax rates in Modvat, like 8%, 16%, 26%. So these are the 3 major rates. So different items are charged differently in Modvat. Now in Senvat, a uniform tax rate actually was fixed, that is 16%. So for everything, this is at 16%. Those items where the government want to increase or decrease the tax was kept out, okay, out of this, like cigarette. So these items are kept out of this. And Senvat now is like 12%. And it is also called model rate. Okay. Model rate means mode. Mode means what? It is a repeated size. For example, if I in the 10 standards class, okay, the size of the shoe. So when I say mode, it will be like 8 inches, something like that. So that is what mode, maximum repeated value. So it was now then reduced to 12%. So what I'm saying is, we have understood what is VAT. VAT is actually nothing but value addition, not paying on output completely. Okay, so output minus input, value addition, and upon the value addition only you will pay. But there are practical hindrances in implementing this. So you will pay upon the output, but input will be reimbursed, or if possible at the time of paying, it will be offset. And for that also specific software and this issues that all this development is required, and reimbursement is what actually mainly happened. And we have discussed about Modvat, introduced in 1986, and then Senvat. It is just renamed and taxes made into one uniform. That's it. So in 2000, Central VAT. Pardon?
So when was VAT introduced?
VAT is not introduced. VAT is a theoretical concept. VAT,
Okay.
what I'm discussing is it's actually a theoretical concept.
Okay.
And on the basis of VAT only, we tried all these, but it is not pure VAT. Pure VAT, if you need to, that's what the limitation I've told you. If you need to implement it, you need that infrastructure, softwares, etc. Because in that context itself, when you need to calculate the input, different input will be used in that cake itself. No, so many inputs will be there for that small item that we are discussing. So practical difficulty is there. Okay. So we'll stop here for today. Now, I was expecting till 10:45, and see, some videos are already uploaded. After this, 2-3 videos are there. Please watch that. Next Saturday, we will meet at 6 p.m. No, not 6 p.m., 7:30 p.m. normal time. I'll update in the WhatsApp group also.